Bitcoin mining is a process that involves validating and recording transactions on the Bitcoin blockchain. It requires a significant amount of computational power, which in turn requires a substantial amount of energy. Currently, Bitcoin mining is primarily done by specialized hardware that consumes a considerable amount of electricity. As for the future of Bitcoin mining, it is difficult to predict with certainty. However, there have been discussions and efforts to make Bitcoin mining more sustainable and environmentally friendly. Some initiatives aim to utilize renewable energy sources, such as solar or wind power, for mining operations. These efforts could potentially reduce the carbon footprint associated with Bitcoin mining. Bitcoin mining could become a new business opportunity for energy companies, as they could sell excess power to miners or even set up their own mining operations. For example, some oil and gas companies have started to use their flared natural gas, which would otherwise be wasted, to power Bitcoin mining rigs. This could reduce their environmental impact and generate additional revenue. However, there are also some challenges and risks involved in Bitcoin mining becoming an energy business. First, Bitcoin mining is very competitive and volatile, as the difficulty of solving the mathematical problems adjusts every 2016 blocks, about 2 weeks, depending on the total computing power of the network. This means that miners need to constantly upgrade their equipment and find cheap sources of electricity to stay profitable. Second, Bitcoin mining is subject to regulatory uncertainty and political pressure, as some governments have banned or restricted it due to concerns about its environmental impact, tax evasion, money laundering, or national security. Third, Bitcoin mining is dependent on the price and demand of Bitcoin, which can fluctuate significantly and unpredictably. If the price of Bitcoin drops below the cost of mining, many miners would have to shut down their operations or sell their equipment at a loss. Nevertheless, there are already some interesting new business models showing proof of concept for new Bitcoin mining and energy production. Business Model 1. A Kenyan company called Gridless uses excess power from solar and wind farms to mine Bitcoin and sell it to local communities at a lower price than the grid. This way, they can reduce electricity costs, increase renewable energy adoption, and earn profits from Bitcoin mining. Business Model 2. A Canadian company called Upstream Data provides portable data centers that can be installed at oil and gas wells to capture the wasted flare gas and convert it into electricity for Bitcoin mining. This way, they can reduce greenhouse gas emissions, provide a new revenue stream for oil and gas producers, and increase the decentralization of Bitcoin mining. Business Model 3. A U.S. company called Layer Technologies operates a Bitcoin mining facility in Texas that uses its own wind and solar power plants to generate electricity for mining. The company also has a proprietary cooling technology that reduces the energy consumption of the mining hardware. Additionally, the company can act as a demand response provider for the grid by adjusting its mining operations according to the grid conditions. This way, they can lower their operational costs, increase their mining profitability, and support the power grid stability. Therefore, we may see the emergence and convergence of sustainable energy and Bitcoin mining, paving the way for the establishment of a new form of energy company co-producing energy and Bitcoins.
So what do you think? What's your opinion on this? Please let us know in the comment section below. Thank you for watching.